Okay, good morning, good morning, good morning, everybody. John and Jim hosting this live session here on Wednesday, December the 11th, 2024. Today I'm going to be going over some Forex pairs, and Jim will show us some indices later on. And so I usually only look at about six, which is still actually quite a big number. One thing that I do recommend is the smaller your area of expertise is in terms of the instruments that you follow, the better you're going to be at trading them. Okay. So, a lot of people will only trade gold or only trade US 30, or maybe they'll trade US 30 and NAS. And I predominantly trade NAS is my go-to, NAS 100. But obviously, other people around the country and around the world are concentrating on different things. So the German 30 is another good one, and the UK 100, the FTSE is another one, especially in Europe that people follow. Japan, 225, I kind of steer clear with. I don't understand it enough, and it does move a bit erratically for my sensibilities. But the six Forex pairs we're going to look at today are AUD USD, Euro USD, GBP JPY, GBP USD, USD CAD, and USD JPY. They do move at different times of the day. So obviously, JPY pairs, we'll look at those. You often get a movement around 2 a.m. in the morning, mountain time, which a lot of people aren't trading. And obviously anything USD can be affected by the news here, plus the New York Open, obviously. GBP can be affected, obviously, and Euro can be affected more about the London Open times and the European Open times. Again, that's going to be more later in the evening for most people over here in the States. But if you're in Australia and New Zealand, obviously you have to figure those times out for yourself as well. As with most things, we start on the higher time frame. So, if we look at Australian USD, we can see clear downtrend here. So we started way back here, and we're on a clear downtrend. So right now you would
Hey, John,
yeah.
uh, we need to see your screen.
Ah, there we go. That's a good idea. How's that?
Perfect.
So let me okay. Let me get rid of that. Okay. So here we go. Went to the 4 hour here. This is Australian dollar, US dollar, AU for short. And we can clearly see a downtrend. So we would preferably only be looking at taking sells. There are some re-entry points here. So obviously over here, there would be a possible re-entry here with this coming off the overbought down here, to give us a heads up that we're heading back down again. There was another one. Yeah, that wasn't so good. That's the most recent one there anyway. Don't forget we're on the 4 hour. We drop down to the 1 hour, and we can see quite clearly things start changing, obviously. I don't know why. There we go. Let's get rid of that. And again, you can see clearly a rejection here. It's really rejection off. So this primary trend line is EMA based and can be support and resistance. So when you get close to the primary trend line, be aware that it might create resistance. In this case, it does. It did wick above it a little while ago, but you can see the wicks are above on these two candles. We've got a double top. We all know what that means. If we have studied the candlestick Bible, double top is a clear reversal signal here. And we tried to get through, we couldn't, and down we go. We got a clear oversold signal here, and down we went. So again, we're in sell mode here. If you wanted to wait until a crossover of the blue and the red, you can do that as well, to give you a kind of safer entry. But that was it. That was a great entry there. That was on the 1 hour. So if you're a swing trader or intraday trader, and you're looking at the 1 hour, that is definitely some good signals there. If we drop it back down to let's go down to the 15. Again, we can see all these entries along here. Nice entry here. Nice entry here. This is setting up to possibly be an entry. I'd like to see that blue cross over the red before I would get in there. So I'd like to see this come up to the overbought line, go through it, and then come back down through the red line, possibly somewhere here. And let's go down. As we're scalpers, I will look at the 1 minute. And right now we've got a nice rejection off the oversold there and went down here. And we would need to see a good, if you use a trend line, typical trend line, and look down here, we're trying to break out of that structure here, but again, a double top here, and we didn't do it. So if this was, we are in buy mode on the primary here, although we're very close to this line here. We've tried to break through it 1, 2, 3, 4, 5 times now, and we've stayed above it. There was big news this morning at 6:30. So you know, if you were looking at the economic calendar, here is your 6:30 news. This is Mountain Time. This is myfxbook.com. You can go to forexfactory.com. That's the one that Jim uses, and it will show you your red folder news. CPI is obviously the big one. Inflation rate is very interesting for people to see. Are we likely to get a rate cut coming up in the next Fed meeting? And these numbers haven't really shifted anywhere. So we'll have to see what the Fed makes of this, because you know, our inflation rate of 2% target is not being reached right now. Although this was the expected inflation rate, 2.7 was expected last month. The previous results were 2.6%. Okay, and the month to month here, again, you know, we're not really showing that coming down yet. So something to look forward to. Oh, look, while we were talking, guess what happened? We broke our trend line. So that would have been, this was giving us the heads up here that it was coming. We did get a rejection. You could have got in on that candle there, actually, even though it was down in the bottom zone. But when you cross through, back up through the middle here, so if I put as you know, I like to put a horizontal line right at the 50 here, you can see we bounced off it there. We went through it, came back, bounced off it, came back, couldn't hold it, and up it went. So that right there was a good, and the blue crossed the red there. That was a great entry on AU. Okay. Next one we'll look at is Euro USD. And now we are in, this is the 1 minute again. So let's go to the 4 hour. Look where we're at. We're very high up here, the 4 hour. We've got some got a lot of activity around that line. We got a low down here. And we have a lot of stuff going on around there as well on the 4 hour. So we're rejecting off these lines here recently. Go down to the 1 hour. Can move that up a little bit there. Prefer that. You can see it rejecting quite clearly here over the last few hours. Strong area of rejection there. And then cut it down to the 1 minute again. Again, you've got a nice trend line here that we can draw down here. And we're breaking out again here on Euro USD. Again, rejecting if we put a, each time I change the pair, my setups disappear. So I have to re-put them in again. That's the 50. You can see a rejection off the 50 here. Which actually showed on that red candle, but you could see it going up here. You have to make sure the color of the candle here is in alignment with the direction you're going. Even though we're counter trend here, so be careful of that. You can see we just rejected off there. But we did get a little crossover here. We did get that. Now we're going down here. You would have got out probably here. But you could have got these pips on this little counter trend trade if you were counter trend trading. But we are going in and out of this primary trend line. Let's go down to our next pair, which is GPP, JPY. Have a look at the setups again. Here's the jump that we get. So when you see the GPP JPY and USD JPY, you're going to see this jump probably at the same time. This is 9, 10 on the chart time, on the sniper scanner time. Okay. So when we go down to USD JPY, we'll probably see the same thing. Again, we'll have a look at what we're doing on the 4 hour. We have been in a downtrend for quite some time. It reversed about here. We got lots of jumps up here to take us over. We've got a crossover right here. And obviously, if we drew the trend line on here, we would see that we broke that trend line again, right about there. Right here. So it looks like this could be a strong reversal. We are getting higher highs over higher highs all the way up. So this looks pretty strong. Go down to 30 minute. There's a break of our trend line there. You see a very, very vertical line right here, which confirms that change there, even though we didn't break the primary trend line till here. That does give you a good indication that this could be turning. We go into range here. There was pips to be had right here with the rejection off the line here. There was pips to be had here. And now here is where the big move is starting to take place. So it gives you the heads up here. We're not breaking down to the oversold level at all there. We did get a little pullback here when we went down to the oversold. Then we were back in for a small buy here, back in for a bigger buy here. Okay, JPP, JPY. Let's go to GBP USD. Same thing again. Go to the 4-hour. Have a look at where your ranges are here. We can see a horizontal line. Let's grab that. And we got another lot of areas around here. So you see where all these little dots are? These will help you look at where your support and resistance lines are, especially when they're very close together. You're going to be putting your line about there. You can move them up to the actual wicks, but the wicks are just telling you where they're trying to get to, not really where the bar closed. And you want to have more confirmation. So for me, this is stronger. We do have some wicks here. We do have some candles here. We have a wick here, candle, candle, wick. So this is quite a strong line on the 4-hour. Same here. You've got this line touch 1, 2, 3, 4, 5, 6, 7 times. So that's a strong area of support there. Drop it down to the 1-hour. You can see these lines pretty much hold good on the 1-hour. Do the 30. Same there. Pretty strong. Only broke out a little bit here. Most of everything is in this very, very tight range on GU. Drop down to the 1 minute. And we can see, we've been in buy mode all the way. So lots of buy opportunities from here. Nice cross up on the overside, oversold. There's a crossover here. That's where the real movement is. You actually could have looked at coming in. That actually was on a green candle, but it was a very small candle. So the trouble with small candles is it doesn't give us a clear enough indication of where the direction is going. A lot of these small candles here. So one of these candles here, this one popped up. We didn't know it was going to come back down again. But wherever your stop loss was, if you were entering here, your stop loss would have been, well out of the way. It wouldn't have even hit on this candle here. So even if you entered here, even if you entered back here, again, your stop loss wouldn't have been hit. And up you go. That stop loss is probably a bit low. I probably would have put it more about there on this one. Okay, and off it went. And look at it, rejected right off that line that we drew on the higher time frames. So that's why these lines are good to draw, because as you approach this, what it's doing is it's telling you, look, we're approaching an area of resistance here. Just be careful. And for me, when I hit that, I would have been finger on button, FOB, ready to get out. We crashed through the overbought here, going down. That's signal enough for me to get out. If I didn't wait for that, this is a bearish engulfing candle. I personally would have got out on that, a double top here as well. So those are a clear exit signal. So you would have got in here. You would have got your pips there. If you entered anywhere here, your stop loss was probably here. If you got out, so even if you got out the bottom of that candle, that's a 1 to 5. Risk to reward ratio, you would have made lots of good pips there. If you were trailing your stop loss, you might have got taken out here. If you're trailing your stop loss really tight and you were moving it up, that might have stopped you out, but you could have re-entered again, because you got a signal right here on the oversold that it's going back up again. So if you did get out somewhere in here, That's not, it's not a bad thing, but you also got to remember we didn't break this blue line and we certainly didn't break the red line. We barely went into the white area here. So this really isn't enough of a pullback for us to worry about. If we put a fib on here from here to here, we didn't break, we broke the 382, but we certainly didn't break the 50. Okay, so when you put a fib on here, that's going to show you how strong that pullback is and whether you got to be wary or not. It didn't break the 50, it carried on up. So no reason to get out. Didn't break the white too much, certainly didn't, only barely broke the blue, didn't go anywhere near the red. And the blue and the red are still expanding out from each other. A little bit contraction there, but basically they carry on expanding out all the way up to there. That's a clear entry here. For me, a clear exit here. That's Pipalicious. All right, let's go to USD CAD. Is my next one. Let's see what we got going up here. Okay, so, don't forget USD, anything USD, could be affected by market open and could be affected by the red folder news. So always be aware of that. Let's go up to the, it always defaults to the 5-hour when you change the screen around. So again, this is the 4-hour here. Very, very clear. Right along the top of all those wicks this time is where I would put mine. You might even drop it down to the top of those candles there. Only because you wicked up to it on this wick back here. Let's drop it down and get a bit more clearer idea where we are here. We've got some lows here, lows back here, and lows here. I'll just leave those lines up to give you an idea where those are. Let's drop down to the 30. Again, okay, let's drop down to the 1. Okay, so here we have, this is our line that we drew up earlier. You can see it's a pretty good resistance line. We did go through it for a few minutes here, but apart from that, we've stayed under it. We are, apart from a little bit here, where our primary trend line turned blue, a little bit here where it turned blue, the primary trend line has been red. So when we got here, we got a crossover here. We dropped down through the overbought. This is a big candle. You would have stayed away from that. And it would have probably wicked you out anyway and hit your stop loss with that big wick. So, that's not something that we'd be interested in taking. But right here, going down from the overbought again, we wait for the, we've got an evening star pattern right here. And there's our confirmation red candle for a sell. So getting in here. But we do have this area of support here. So it didn't actually go very far, but you would have taken pips down to there. You would have got out with this coming up through the oversold here, the stochastic popping up through the oversold. If you didn't get out there, that bullish engulfing candle was probably enough to get you out, even though it didn't break the blue. We did go quite heavily into the white, which I don't like. Bollinger Bands are contracting right here, so we're losing all that volume, and now we're going to go in range. And look how narrow the Bollinger Bands are here. We need to wait. There's nothing setting up that I'd be interested in there. And then our last pair before I hand it over to Jim is UJ. And here we go again. Remember I said 9, I think it was 910. Exactly. There's the JPY part of the pair. It's heading up. Again, you can see that resistance line over there. This support line has been pumped out by this massive wick here that would have taken that was a stop punt, would have taken everyone's stops out if you were in that trade. And you might have avoided it because of these are the very small candles here. We did cross over here, but we really only turned the primary trend line from red to blue on that big candle there. The stochastic was way back here, and it was on a red candle. The green candle is here. A, it's very small. B, the secondary trend line, the secondary EMA. The blue is below the red, so that's not a buy signal. And we are below the primary trend line as well, so that's not something we can take. It did cross over here, but again, very small candle. And we are already in overbought territory. So again, that would have saved us. Again, overbought, that would have saved us. So hopefully no one entered on that candle and got wicked out straight away. If we look at let's go and look at the 4 hour on that. Again, we've got highs are way up here, so we're in a nice range here. We do have some.
Right, Jim and John were on GFU doing
We do have.
live training.
Let me just mute Shane now. Sorry, Shane. Okay. So here's a support line here. We did go down through it here, but this is a 4 hour. Let's go down and see where we got some other good. Yeah, probably pop another one around here on the 1 hour. Let's go to 30-minute. See what we've got here. This is an area here that we would be looking at. I've gone along the top of the candles here. So this could be an area of support. Looks like we're rejecting off that, tried to break through, hit it, couldn't make it. Did close below it slightly there. Tried going down here, didn't do it, and now we have finally rejected it. But again, we don't have a lot of room to move here when we got our resistance up here. So not a lot of pips in that, even though we are, primary trend is up, secondary trend lines are up. Right now we're in the white area, which I'm not too happy about. One thing I do like, one good signal I do like is when one candle goes through both the secondary trend lines. That indicates a strong move. You can see it here as well. Obviously, when you get a crossover, because the lines are so close together, that single candle will generally go through both of them. But when they are apart, a candle that goes through both of them in one candle is pretty strong. We are on the 30-minute, so that does indicate that there could be a reversal off that line. We drop it down to the 1 minute to see what we're at. And to check, if you get it looking like this, all squidged up, if you go put your cursor over this right hand where the prices are, right click it, you hit reset price scale, that will reset it to a better size for you so you can see it. We did just cross over the primary trend line here. We did get a signal here on the stochastic going up through the oversold. We would have had to wait for the green candle, which is the next one there. It's in no man's land for me, even though the blue is above the red, we're still below the primary trend line. So this one rejecting off the not quite making it through the 50 here would indicate that this one could have been your entry right here and taking some pips there. You've got some ways to go to that resistance line up there, so there is a bunch of pips between that. So, you know, from where we are there to there, 38 pips. So there is some movement there. It's not strong enough right now. We're in the overbought and still heading up. So as this turns around and come down here, we'd have to wait for it to come back through the oversold and go back up through the oversold here, unless it rejects again for this, which is done twice already. It might just come down here, might come down here, do this, and then go back up again. So be looking for that as well as a possible entry. If the action is all buy action, it's going to stay up in that upper half of the stochastic there. All right. Any questions on that from anybody? Hi, everybody who's joined us. Anybody, anything in the chat? Hi, Joni or Johnny. No questions. Hey, Remy, good to see you on. Okay, so what I'm going to do now, if there's no questions right now, I'm going to hand it over to Jim. Yeah, good to have you here as well, Remy. I know you've been busy working, so good you've got some time to join us. I'm going to hand it over to my coach and mentor, Jim Aguilera. He's going to go over the indices in depth today and show you what he's been seeing on the charts today as well. And let's see if we've got some possible setups in the next half an hour as well. Okay, take it away, Jim.
Thanks, John. Let's see. I need to be host.
Yeah, here we go.
All right. So I got my NAS 100 here, which has made a beautiful move this morning. And what I look at first when I come on the charts, and they usually come on at after US New York Open, which was right here at 1430 on this chart. And one thing I like to notice is down here is this blue dotted line represents the low of London session. And then we did have a high of London session, which was just right here. Okay, so we'll just put a little line there. Okay, now, actually, so we had pre-New York news at 1330, which was right here. So this high was already broken. And so what a lot of indices like to do for New York Open is they almost always take out at least the previous session's high or low. And then oftentimes they take out both directions. Now we can't predict which way it's going to go, and we can't just fall in love with the idea that it's going to take out a certain side of the previous session. But just kind of having that in the back of our minds will help us with, potential trade confirmations. This particular case, I mean, this thing just ran, and at some point in time, it is going to come take out this low. It may not be today or tomorrow, but oftentimes it is, during the same day, it will take out what was the top of the previous session and then the bottom of the previous session. In this case, we are so far away from the low that I'm not sure it will happen today. Probably not, but it is possible, and does happen often, especially when price kind of stays within, reason. So just to note, I'll show you how that turned out on US 30 as well. But for NAS, there's one particular type of entry with this scanner that I prefer, and that I would suggest that, if you're newer, that you try to stick to. Okay. And I'll show you a couple examples before the New York market open, and then we'll look at what happened after, okay? But the first thing we want to do is realize, that this here is the primary trend line, and which side of the primary trend line are we on? So we're above, so we're primarily only looking for buys. Okay, the second thing we're looking at is the secondary trend lines. The blue above the red constitutes, a confirmation of the uptrend, and that we're looking for buys when these blue is above the red. So then one only other thing that we would look at is the stochastic down here. Okay, so when is an ideal time to enter is when the stochastic pulls down this line down here that's considered to be oversold, and then the very next candle that breaks above it. Okay, so right here, this candle right here broke above this oversold line. So this is a potential entry. So that's just an example. So this is the type of entries that I'm looking for primarily when I start to get on the charts. Okay, so New York open happened here. This actually moved quite well. Usually a lot of times around market open, you can get a lot of, whipsaw back and forth, a lot of wicks, and a lot of indecision. In this case, this thing moved just pretty steadily up. One other thing I'll note here is that I have this line on the chart here, which was the all-time high. And all you had to do is go back to like a higher time frame chart and see that there's a potential resistance level here, because this was previously the all-time high for NAS. Okay, so I had that marked up. And so like I said, the entries that I'm looking for is a pullback to the oversold and then a break back up. We never got exactly that setup in this whole move, right? So the open happened here. I don't like to trade, real close to open, because you just really never know which direction this thing's going to go. But even a few minutes after, we did get a pullback very, very close. Okay, so one thing that I recommend is that you set up a trading plan for yourself. Okay, and you have very strict rules and confirmations that you set up for yourself in your trading plan. And, whatever those rules are, you need to stick to. Now, as you gain experience and as you gain understanding of the charts, you can adjust that trading plan. Okay. But if your trading plan is what I basically just covered about this being oversold for buys in an uptrend before you get in, you would have stayed out of everything here because it just never did it. Okay. And it's okay that, this thing ran 100 pips and you didn't capture any of those pips, because you have to have a plan that you have back tested. And based on back testing results, you could see that that plan works if you stick to it. Once you start deviating from your plan, even if it works, if it's not back tested, you're setting yourselves up for failure. So if you start taking a couple wins on things that aren't part of your trading plan, you're going to start doing more of that behavior. And if it's not back tested, then eventually you're probably going to start losing doing that same stuff, because you have been rewarded with that negative behavior that you were doing by not following your trading plan and taking trades that were outside of your trading plan. And eventually it's going to bite you. Okay. Now, there are other ways to have entered here, which is, possible, but is that part of your trading plan? Right. So at the beginning, keep things simple, right? Pick a couple different type of entries that, you've back tested that work, and wait for those types of entries. And if those entries don't present themselves during your trading session, it's okay. The number one rule of trading is capital preservation. And even though you didn't make any money or catch any pips during the time that you sat down in front of the charts, well, you also didn't lose anything, right? So that's the most important thing. Okay. Now, if you want to look at some secondary type of entries, you can, and then back test those and understand how they work and understand the best times to take those. You can add that to your trading plan so that you can capture, moves like this that don't meet your, primary, indication of when you can enter. Okay. So, we did get some pullbacks here and then continuations. Nothing followed the rule that I like to follow. Okay. And then one thing is, if you were in a trade here, you notice that this is where I marked up the all-time high. So if you are in a trade here, you want to target this area, or at the very least, you're trailing your stop loss in such a way so that when this pulls back 25, 26 pips, that you're not giving back 26 pips in the event that your stop loss is trailing close, right? And so this did pull back. We got a big bearish engulfing candle here. We even wicked down below this blue EMA, came down into the white area. There would have been lots of reasons to, exit a trade here, but you would have given back potentially 25 plus pips if you let it come all the way back to this area. So for me personally, I like to set my take profits a couple pips before a potential zone of interest, like an all-time high or support resistance, because I don't know if it's actually going to get there. We have spread to contend with. We have chart differences between brokers. So if you're just setting a TP a few pips before, then you don't even have to, worry about whether this is actually going to come here, how far it might pull back. If it pulls back at all, sometimes it just breaks through. Okay. But if you are trailing, I'm probably trailing, one candle behind as it starts to go up. And then if this candle didn't hit my TP, or if I don't even have a TP, I'm just using a trailing stop, I'm probably trailing behind this candle. As this candle starts to paint, it comes down, takes me out, right? So I gave back, maybe 4 or 5 pips instead of 25. And then as you can see, we get, another shot at this area. We get another rejection, and then we break through. One of the types of entries that, you could take here, even though this entry isn't here for us down here, is we get a break of a resistance, and we get a retest right here with this wick. Okay. So you could enter 2 different ways. You can enter as soon as you see this wick come back up. Okay. And then this candle close with a wick. So you'd be getting in at the beginning of this candle. Now, an additional entry would wait for this candle to paint to make sure it was going to be a bullish candle. At that point, you've kind of missed out on a few pips, but there's still probably 10, so 16, 17 pips there. But if you were to get in at the close of this hammer candle here, then you would have had potentially 30, right? And depending on your trading plan and your trading style and how you trail and how you set targets, I like to target 30 pips on NAS. So this would have been really close to hitting my target. Probably would have hit it before the pullback. Okay. Now, I put up this little trend line here to kind of help me visualize if and when I might see a reversal back down, because taking any kind of sells in this direction would be considered counter trend and is a higher risk trade and shouldn't be attempted unless you are, more experienced. But the first time we would even consider looking at a potential counter is when we break this trend, right? So we finally break the trend here and we do move down. But for me, we didn't really have a reason to enter, because these bands are now, they're heading up here, and then here they're just flat. Okay. So they never started to really turn down. Got a little bit here. Okay. But immediately got a rejection. We went back up. So these bands have not ever really started to turn down, because if we did get some good reasons to enter, and we didn't get our entry till somewhere here, we have 90 pips to get to the primary trend line. And the reason I, make that note and comment is because the primary trend line is an area of moving support and resistance. It's an area of rejection. So if we are eventually going to get a move down, this is an area where the move can reverse. Okay. So you don't want to, you don't want to take counter trends unless you're experienced. But, if you do take a counter trend, you don't want to take a counter trend trade. Let's see here. When you're really close to the primary trend line, right? Because it's an area of rejection. So you want space to it so that you have time to lock in profit, trail your stop, and potentially take profit around this line. So when you're getting into a trade here, you don't have very much room. If you were to get into a trade here now, some type of counter trend, which I don't see a confirmation or an entry for that yet, you have a lot of room to get to this line. Okay. So right now, as you can see, we're actually kind of in consolidation. The bands are pretty flat. Okay. And we have, an area here at the top we're not breaking, and we have this area at the bottom we're not breaking. So for me personally, I'm waiting for this thing to make a decision on, is it going to break back down, or are we going to continue higher? Okay, so even though we are starting to get these breaks down here, I'm no longer interested. Okay, first of all, the EMAs, these secondary trend lines, have crossed each other down. They crossed each other down here. They crossed back up. Okay, when these lines cross each other over and over, that's another indication that you are in consolidation, and that you should be patient and potentially wait for these lines to get away from each other and start to expand, and then wait for a pullback before you get in. Okay, now the lines will cross, and that's okay, right? They may cross down and then back up and start a trend, but it's them crossing over and over multiple times that is an indication that there is consolidation. So see down here, we got the cross down, and we're getting the breakup with this candle. But I'm not interested in this particular idea for myself, because we're in consolidation, right? This can go up 1 or 2 pips and then come down. And to me, potentially grabbing, 4, 5, 6, 7 pips isn't worth this potentially just reversing and finally breaking out of this consolidation. Okay. So that is what I'm looking at right now. I'm going to switch over to US 30. And so, for US 30, nice thing about the sniper scanner is it does, mark up the zones from the previous sessions. So down here, we had the low on London. Okay. And then up here, we've established this high here. Okay. So we had market open here. And so this is a type of movement that you can typically expect from market open. All right, we got lots of wicks, okay, up and down, and you don't really know where this is going to go. Now, obviously, we did go down 150 pips or so, but like I said, this thing likes to target the previous session's highs and lows, and so here's the low. So I would be interested in looking at a sell here, right? And we didn't get that textbook entry that I like. We didn't get anywhere in this move down here an overbought, okay, and then a breakdown. But I like the fact that this kind of came down close to the primary trend line once, came down here, wicked it again, another wick, and then break. Okay, we are in the lower band of the Bollinger Bands here for this move here. And, this is a big bearish engulfing candle. We're now, 18 minutes removed from market open at this point. So things start to settle down. And, this is a good entry right here, right? I took 50 pips, okay? Which was like right around here. I'll just draw it up. So typically, I don't recommend just taking a break of this primary trend line. But for myself, like I said, I saw multiple attempts at it. This is clearly trending down. The bands are starting to separate here. The EMAs are starting to separate. And I used a 30 pip stop and a 50 pip TP. I almost got it here, and I was already 10 pips locked in on my trailing stop loss, and then just had a small pullback and then came through and got it. Okay. Now once we break the bottom here, there's oftentimes a reversal, but we don't know that for sure, right? Oftentimes it can come down here, create a bottom, and then come back down, wick that bottom out before it continues up. So far we have not gotten a wick below here, but eventually we could be coming back to target this, right? And the reason that the market likes to target these areas is because this is where people put their stop losses, or this is where people put, say like a buy stop, where once it crosses here, they're going to get into a buy, or maybe they're manually going to enter a buy because they are a breakout trader, right? They like to look for breakouts. So there's a lot of potential liquidity here for the big banks and institutions to come and target. And so, and same with down here, right? Now this has now become a area of liquidity where lots of people have their stop losses who are in buys. Okay. And it doesn't mean that during this session, it's going to come to here or it's going to come to here. And even if it comes to both, doesn't mean it's going to do it in a straight shot. Doesn't mean that right now we're getting a big bearish candle means we should just get in and this is our target, right? We don't know that for sure, but it's just something to keep in the back of your mind when you start seeing this market move, right? So eventually we are going to get a break above here that's going to hold, okay? And the safer way to determine whether this is going to break above here and hold is wait for these EMAs to also get above here. Okay, so we have a bit of a zone here where market has come and tested and tested. So once price does get above this primary trend line and breaks these highs, I wouldn't necessarily just get into a buy as soon as a candle closed above here or something. But once a candle closed above here, I would have confidence that this is most likely going to head up to this area. And then I would be looking for one of my entries. I would be looking for break above here, and then hopefully a pullback down below here, and then a break above, and then I could take an entry with more confidence, to this area. Okay. Now, as far as potentially looking at sells here, we are trending down. Sells are, in alignment with the analysis here. Okay, but we are in a bigger consolidation pattern here. I mean, this is probably well over 50 pips. This consolidation pattern, almost about 70 pips. Okay, so it is still a consolidation pattern, even though there is a lot of pips there. Okay, so personally, if everything doesn't line up for me, especially as a new trader, I just stay out. Okay, now as you become more experienced, you can recognize this primary trend line as an area of rejection, and you could take what might be considered higher risk trades coming off of this line. So you would take, sells coming off of here, but they are higher risk. For me, if I'm new, I'm waiting for this thing to kind of show itself. Now, once, this is a potential area down here that I'm looking to see if it's going to break out and be low. All right, once it breaks out there, we still have, 47 pips doesn't mean you're going to take an entry right at the beginning of that. But, you know, once your entry comes, if you have 25 or 30 pips to the bottom of here, then that's still enough room, in my opinion, to get into a move, right? So I'm really waiting for this thing to get out of one of these areas and then give me a proper entry. Okay. So that is what I'm waiting for. So we're going to go back, just do a little bit of back testing during London session, just to give you an idea of what these entries do look like. So right here, we're above the primary trend line. We're in an uptrend, and we're waiting for a potential entry for us, right? So we get a break below the lines here, and then on this candle, we get a move up, or the stochastic crosses up, right? So during a lower volume session, like London, I can use a tighter stop, like 15, and target 30. Okay. So we don't really get the full target here, but I like to use a trailing stop. And, once I get into profit, I like to trail my stop. And if I see any pullbacks, then I will target that pullback area for a stop loss. So for myself, just use this here. The stop is originally here. My trade immediately goes into drawdown, and then it breaks above the highest point, which was here on this candle right here. So I lower my stop. I still can lose pips. Okay, I'm not in profit with my stop loss yet, but at least I'm not giving up the full 15 if this thing decides to reverse. Okay, as it starts to move away and I have a little breathing room, even though it hasn't really made a new pullback low, I can move my stop into profit a little bit. And then as this starts to, get towards my 30 pip TP, I can at least say, okay, I'm going to for sure take 5, right? And then it starts to move away a little bit. I could just tell myself, well, I'm for sure going to take 10. And then from there, it just depends, right, on a live market. It's a little different when you're live and how you're trailing. But I like this level here of resistance that it broke. So I'd probably just keep my stop there, and then probably would have gotten out when it came into the white here, or maybe here, and I would have caught 10 15 pips. Okay, but that's the entry you're looking for. So we get the entry again down here, it pulls to oversold, and then on this candle it becomes back into being out of oversold. It's a potential entry. Okay, and then once again, we don't get the full target, but you're at least getting some pips out of this, right? You shouldn't let this ever come back and become a loser. You shouldn't let it get this far into profit and not be at least at break even. Okay. And then so down here, we have a similar type of entry. We have a break below, and then we have a break above. This is a big bullish engulfing candle. These EMAs are actually still crossed down, but if you can use an additional confirmation for yourself as to why, the additional confirmations trump the fact that these lines are still crossed down, right? So we have a rejection of the primary trend line, and we have a bullish engulfing candle that engulfs 5 candles to the left. 1, 2, 3, 4, 5, engulfs all of those. So those two things trump the fact that these trend lines are still crossed in the wrong direction. Okay, and it breaks through both. So for me, that's a good enough reason to get into a buy. Now, we'll note here maybe that these EMAs are flat. Okay, so there is a potential here that maybe we shouldn't enter this trade because we're kind of in consolidation here. Okay, but we are close enough to the bottom of the consolidation phase that even if all we did is get back to the top, we at least can move our stops to break even to see if it's going to finally break out of this area. Eventually this does run for 30. Okay. Now, conversely, down here, we're below the primary trend line. So we're looking for sells. Okay. And we're looking for then our signature entry, or my signature entry, which is to pull back to this overbought area and then have a candle that breaks down. So that is this candle right here. Right. So if we look at that candle, look at a potential entry. Once again, during lower volume, I like to use lower stops and lower targets. This does eventually run. And this thing got to 14, 15 pips in profit before it came back to our entry. So I may have taken maybe a break even or 5 pips here, because I don't think I would have held all the way to here, but that's okay, because we get some more entries here. So we get a potential entry on this candle. Okay. Immediately goes into drawdown, eventually hits the target. This one would have been a lot easier to hold on to, because each time it made a pullback, and if you would have trailed your stop at each pullback, it eventually just hits without ever breaking one of the pullbacks. Okay. So each one of these potential red candles would have been an entry. The lines start to go up here. The EMAs, secondary trend EMAs, start to kind of go up here. So this entry right here is ideal, right? Because we kind of have a little trend line forming going back, and we kind of break back in the correct direction with this candle, right? So, and we get 0 drawdown with this entry, and we get 30 plus pips. Okay. We get another pullback here to overbought, and then a break below on this red candle. All right, and we just barely hit 30 pips there. We did get a pullback back to entry area before we do go down. So depending on your style of trailing your stop, you may have gotten a break even here, or you could have potentially taken 30, and we get another entry here. Okay, this time we didn't get to 30, but there was definitely pips in there. Should have got at least 10 or 15 out of that. All right, so that's it for me. Let's just go see what we're doing over here, see if anything's happened. Okay, so we finally got a breakout here, and we're now getting to a potential entry, right? So we're getting close to being overbought. We are in the blue band area, and so if we do get an overbought here, so the candle has to close up here in order for this to even come up here. And if it does that, then we're looking for the next bearish candle to break us back down, and then potentially go down here. So it doesn't look like we're quite going to get that yet, but we'll see if we get that. All right, John.